Welcome back to the Wall Street Podcast. Today, we're doing a deep dive into a report from Goldman Sachs, China Securities Company Limited. It's their China New Energy Vehicle Weekly Chart Book, released August 13th, 2025.
That's right. And this report, it really drills down into China's NEV market for week 32. It covers, the key trends, how different brands are doing pricing, and policy impacts, too. It's quite comprehensive for a weekly snapshot.
Okay, so let's jump right in. Market penetration and volume first. What are the headline figures?
Well, NEV penetration reached 57.6% in week 32. That's actually a 2-month high.
57.6%.
Yeah, and it's up 4.6 percentage points just from the previous week. It really suggests an acceleration in adoption.
Even though overall car sales were down slightly.
Exactly. Total passenger vehicle registrations were down 19% week over week to about 375,000 units. NEVs themselves were also down 12% to 216,000. But that rising penetration rate tells you NEVs took a much bigger slice of the pie, even in a slower week overall.
Right. Okay. Makes sense. Now, what about specific brands? Who's making moves?
We saw some strong growth figures. Tesla China was up 22% week over week. Zeekr also had a good week, up 13%.
And in terms of sheer volume, still BYD leading.
Oh, yes. BYD holds about 25% of the market. Then you have Tesla China at 6% and Leap Motor at 4%. Those are the top three for the week.
And who gained the most share?
Tesla China saw the biggest jump, adding 1.7 percentage points. BYD also gained about half a percentage point.
Interesting. And some lost share, presumably?
Correct. The report notes AITO and NIO saw the largest contractions in market share for that week. It's definitely a competitive space.
Okay, let's talk policy. The trade-in subsidy program, is that still a big factor?
Seems to be. The report mentions 4.1 million applications were processed by the end of May.
4.1 million. That's substantial.
It is. And the daily application rate picked up, too. Between May 12th and 31st, it averaged around 45,000 new applications per day, up from 32,000 before that.
So, strong policy momentum. What about upcoming events we should watch?
Good question. The report flags a few. Geely and Zeekr have their Q2 results coming out August 14th. Then Li Auto starts delivering its i8 model on August 20th. And BYD reports its Q2 results on August 26th. So quite a bit happening soon.
Right. Let's pivot to one of our commentary segments now. Pricing. How do recent adjustments reflect the competition?
Well, one example is Li Auto consolidating the MSRP for its i8 model. It resulted in an average cut of about 6,000 RMB. That's roughly $830 US.
$830 cut, okay. And broader trends.
Year to date, the market's seen 62 price cuts, averaging about 8%. That's actually fewer cuts than last year at this point, though the average percentage is similar. But here's a key point. NEV dealer discounts are running much lower than for traditional cars. As of August 11th, NEVs averaged 7.93% off MSRP at the dealer.
And for internal combustion engine vehicles?
Much higher, 21.49%. It suggests, way more pricing pressure on the traditional ICE models right now.
That's a really stark difference. Okay, second module, the battery supply chain. What's happening with upstream costs?
Lithium carbonate prices ticked up slightly, about 2.7% week over week, reaching 75,000 RMB per ton. That's around $10,350 US.
Okay, a small increase. What about actual battery cell prices?
Those remained flat, according to the report. Both LFP and NCM cells, the main types, showed no change week over week. So some stability there despite the raw material nudge.
Got it. Stable cell prices. Third module, consumer demand signals. Beyond the registration numbers, what else indicates demand?
The report highlights new order intake for week 32. Leap Motor apparently took in 12,000 orders. NIO reported 10,000, and Li Auto around 9,000.
So strong order books for some key players.
Yes, and when you combine that with those rising daily trade-in applications we mentioned earlier, well, it paints a picture of pretty robust policy-supported demand for NEVs.
So let's bring this together. What's the impact on the general public from all this?
I think there are two main things. First, affordability. These price adjustments, plus the trade-in subsidies, they genuinely make it easier for consumers like you to consider buying an NEV or upgrading your current vehicle.
Right, lowering the financial barrier.
Exactly. And second, that high penetration rate, over 57% now, it's not just a number, it signifies a real shift in how people are getting around in China, which down the line impacts everything from city planning to the urgent need for more charging infrastructure. It's a fundamental change in transportation habits.
So pulling back, the Goldman Sachs data paints a picture of a really dynamic Chinese NEV market. Highly competitive, yes, but also strongly supported by policy. Which leads us to a final thought for you, our listener. As NEV penetration keeps climbing and this intense competition continues, how will manufacturers manage that tricky balance between chasing market share and actually maintaining profitability? And maybe more importantly, what ripple effects will that balancing act have on the future of the entire global auto industry? Something to consider. That's all for this deep dive on the Wall Street Podcast.